How to set up MDT and DT chart. MDT and DT chart are basically, again, MDT is basically a momentum method which looks for a stock which has an established momentum on a longer time frame, that is a 6 months time frame, while DT looks for a stock which is more related to if you are to like really look at DT or double trouble, it's basically similar to Nicholas Darva's book, where like he talked about how he made 2 per million trading in stocks. So DT is just like exactly similar to what he talks about, where he was looking for a stock which has doubled from its 52-week low. So the big difference between MDT and DT is this uses 6 months momentum, this uses 1 year momentum, and the way the momentum is calculated. The way momentum is calculated in the MDT is the way momentum is calculated in most of the momentum studies which have been done, where they look for stock's momentum compared to its 126 days momentum, or 126 days is equivalent to 6 months. So the stock's momentum is calculated as a ratio of its price to a average price of last 126 days. Now that's a relative way of looking at momentum. What we are trying to do is we are trying to create a momentum signal. So let's start by looking at what is MDT, and then we can look at DT. In order to set up MDT, what you're looking at is basically C by average C is greater than 1.19. So what you are saying is that a stock is definitely in the momentum phase when it is 19% over its average 126 days momentum. That way you are reducing the universe to a small set of stocks, and on the downside you're looking at when the stock is down like at least 81%. It is similar to 0.81. C by average C is less than 0.81, so you're looking at basically a stock which is 19% below its 126 day moving average. So this is how, in order to set this up, all that you need to do again is, if you have to set up this, add a plot to a chart. Go to any chart, add a plot to the chart. You can add a plot, go to custom PCF plus true indicator. When you go to custom PCF true indicator, you can change this to area. You can make this whichever color you want, like say we are making this, and then C divided by average C 126 is greater than or equal to 1.19, and you can then like fill it up with whatever color you want to fill up, and that's how you will get. And then you can change the label here to MDT, and that's how you'll get this, similar to how I have set up this. The only difference is color. If I make this green, it will look similar, like say green, and this is green. Okay, so you'll get MDT which is similar to what is here basically. Okay, so similarly you can put in the negative. In order to put the negative, again you go click for on this, look for percentage true indicator, and in that formula you edit it out, first change it to area, then change it to whatever color you want, and change this color also to that, and then we put in C divided by average C 126 is less than or equal to 0.81, and make this MDT. Okay, so you will get, like say if you have a downtrending stock, say let's say AY, okay, this is downtrending, so you will get this here. And now in order to put this in the same pane, you just like go and overlay, and then they'll be in the same pane. So this is to show you how it is done. I have like already have this set up here. So now you have MDT and DT. Now if you look at a stock like this, see like this is where it first time met your condition of MDT, and then it, if you look at like say it kept on having that MDT value, the condition being met, while it made 537% move. If you see in that box which is there on the left hand side, you will see that it shows that percentage change for around 11 months. So now it gapped down, and then since then it has been like basically down 11%, but this is where the MDT turned to negative. So Or let's look at say some of the recent ones, like say this is where MDT went positive for this. There were like couple of periods here really didn't take off, now here, and from that particular thing it has gone up around 434. So one of the advantages of MDT is basically you will be able to narrow the universe of stock to a smaller set of stocks. So if you like, and I say look at the total like an US stocks, which is like an 4,895 stocks. But if you use a condition like MDT, what you will see is that only around 300 stocks will meet that condition. So it becomes more easy for you to focus on 300 stocks than to focus on 4,895. Now, so let's like if this is clear, let's like look at a MDT scan. Now, in order to create an MDT scan, what you have to do is basically universe, which is a list which I prepare based on US stocks, ETFs, so that you don't have to run 2 or 3 scans plus the ADRs or the American Depository Receipts. On that, I run the MDT scan, which is the bullish MDT C by average C126 is greater than 1.19, and then liquidity, because you don't want stocks which don't have enough liquidities, which is 100,000, and then I look for a price about 3. So if you apply that, what you get is 304 stocks which are meeting the MDT condition. Now, if you want to sort them by MDT, you can also add a column, MDT column. In order to add an MDT column, what you do is you go here, insert a column, and you can write a formula. You can name it like, say, I'm just going to name it like an MDT test, because I already have MDT as a column there. C by average C 126. Okay, because you're not going to be using, you're going to use that for sorting. You're not going to use it as a percentage true indicator here. So once you have that, what you get is like, this is the #1 ranked stock by MDT currently, Mara. As you can see, it has gained momentum in the last 3 days. This is #2 ranked, this is #3 ranked, and you will see that how MDT can help you find the strongest stocks in the market, because when they start making the big move is when the MDT turns positive. So that's how it is a signal by itself to tell you that, look, and this stock has gained momentum. And then once a stock gains momentum, you can look for a buy point along the way, or you can do an anticipation on that. And MDT is very useful if you're looking for a longer term hold, because then a stock which like gets into some sort of like, say, look at like something like this is a stock which recently I bought. Now here the MDT has gone positive after a long period of time. Here also, like, stock didn't really make a move, but like stock is coming out of a big consolidation on high volume, and it has also gone above MDT. Now if the move continues, this might be a multi-month move. So that is how you can use the momentum or the MDT. Basically you can use MDT to find longer term position trade, because once you have stocks which are like these 304 stocks which are meeting the condition, what you want to look at is like, say, in a stock like this, you want to find a period where there is a consolidation and when it is coming out of the consolidation. So if you have an MDT list, you can spend time looking at stocks which are consolidating. In order to do that, what you want is you don't want a stock like this which has already made a move. You want a stock which is consolidating. Now there are many ways you can find that, but one of the simpler ways you can do is scan it by 25 days price percentage, that is C by C25 just, and look for the one which are lower in value. So what I've done is like, say, this is at the highest value. Now look at something which is at a lower value. That means like their 25 days price is not been going up much. Now you have this particular stock, okay, and in this particular case what you will see is that it is consolidating in a sideways manner. Now if this breaks out, that's the kind of candidate it has MDT. See, like, this is the kind of consolidation actually you want to see once MDT has been reached, and that is how you can find a move like this. So in order to find those kind of a stock, you can use a consolidation periods like this. Like, this stock is still consolidating after a big this thing move, and especially stocks which consolidate within 15 to 20% of their high. So this is like, and I say this particular stock is within still 20% of its high. If you see in that box, it's down 18.58% from its high. So that's the kind of stocks which are still within 20-25%, because they are like holding on to their gains. They're not reverse, basically, is what you want to see. And then see, like, this is an ideal example of the kind of a stock which you want to see setting up. Now if this stock breaks out, then it has the potential to make a big move. So that way, once you run an MDT scan, or once you set up this as an MDT scan, you can sort it by the price percent change in last 25 days. And that I'm removing these columns because I don't need, I already have that column. You can add that as a column here, insert, and just write a new formula. You can call it like say month or whatever you want to call it, and C by C25, which is like 25 days price percent change. And if you add that as a column and sort by it with the lowest value, you will find stocks which have, because we are already selecting stocks with momentum and which are in last month haven't made much of a progress. So these are the kind of stocks which are consolidating, and when they have a breakout, they can give you an opportunity to buy. Now this is where this allows you to do research, because not every stock here is likely to continue to go up, but you can like use another kind of filters along with MDT, like say let's like, and I say look at like in this way. Now I ran this on a universe, okay? Instead of running it on a universe, I want to run it on a set of stocks which have very good earnings, projected earnings, okay? So I have a scan which I run in IBD, which is like say 2929, which is basically a stock which has which is projected to have 29% EPS growth rate in next quarter. So you're not talking about past, you're talking about in future. So next quarter it is projected to have 29% plus EPS growth, and also a stock which is likely which is projected to have 29% EPS growth next year. So you're not only looking for next quarter, but you also want something which has got 29% plus kind of a thing, and also sales is more than 20%. So you want a stock which is growing sales also. So this is a stock scan which I run in MarketSmith. Now let's like, and instead of using it on a universe, if you use it on this, now what you find is you only find 27 candidates. Now these are stocks which have something going for them, because they're going to be projected to grow at 29% next quarter, and they're also projected to grow 29% next year. So 2018 or like in 4 quarters growth rate projected is 29% plus, and there are also sales of 20% plus. I will show you people how to do that kind of a scanning in MarketSmith. You need MarketSmith for that. But like say here is a stock. Now first, like we have only 27 stocks to look at. So that way you have a very small universe of stock to look at once you apply this. Now here is a stock team which was like going sideways for a long period of time, and the MDT was lower than 1.19. Recently with our earnings gap up, it has gained momentum, or it is meeting your momentum condition, and now it is going sideways, okay? It is setting up, consolidating. So any breakout from this is the kind of stock which you want to buy if you're going to be doing a position trading or holding for months or for year or something, because this is the kind of stock which has the growth, for projected growth. You're not looking at past growth, like say this is projected growth, right? And in the list which I talked about is projected growth. So it is looking at something which is likely to go up in EPS terms in next quarter and next 4 quarters. So that's like a very nice candidate to keep an eye on. Now you have Trox, which is again like going sideways. That's another nice candidate. Adobe, which already had a big move. So ideally you want to see like something which has just started out the move. Like I like Team as a better candidate than Adobe, because Adobe has already made a move. A lot of move has already happened on Adobe. Doesn't mean that it cannot go up, but that is more a swing kind of a candidate. Then you have EHIC, which is just recently had good earnings, and this is the earnings percentage: 200% earnings growth, 25% sales growth, 700. These are the last 4 quarters of its earning growth, and then it is projected to grow at 29% for the next quarter and 29% for the year. So this is the kind of stock which is, if you're looking for holding for a longer term, then you can look at some of these kind of stocks which are setting up. Obviously you have to find it early in the move, or at a logical buy point, and not buy something which is extended. Again, like you have a stock which is like going sideways, and these are the earnings for the last 5 quarters, triple digit earnings, and it is projected to grow at 29%, and it is projected next year will be also 29% plus, so 4 quarters. So that's like another kind of stocks which you want to look at. CVRR, then you have Continental Resources, PBF, but some of them become more extended. So William Lyons, Home Pump, and DK. So these are the only stocks which are meeting condition. Again, like if you see Splunk, like this is 70% growth rate and 34% sales growth rate in the most recent quarter, where this earnings came in 60, 32, 99 EPS rating on IBD, and it is projected to grow at 29% for the next quarter and 29% for the next year, and sales growth is about 20%. So that's like the kind of candidate which has the potential. Always remember, you still need to use stops, because potential doesn't mean that this is 100% likely to happen. The markets are uncertain. So you have a very good candidate which you found using MDT like this. So you can use the similar kind of a thing on IBD. There is another IBD list which I look at, which is basically the IBD 80 instead of 85 I look at 80. So EPS rating is above 80, and relative strength rating is above 80, even though it is called 70. That's a misnomer. It's like, so now if you look at, you will find some candidate here. These are stocks which have currently good momentum. Not necessarily all of them have projected growth rates which are going to be positive. That is why I run the other one, which is like a more looking at projected. Now here you have Skechers, which has just got MDT going for it, like it has just established momentum. So this is the kind of candidate you want to find using MDT, especially right at the beginning of the move. Team again will show up because it also has high EPS and relative strength rating currently, or Universal Forest product, which is like going sideways. So using a combination of long-term momentum, which is a 6 months momentum, and a short-term momentum, which is a month momentum, you can find candidates which are consolidating, and that is how you can use MDT. And a lot of this work you can do, like something like this has been going sideways for weeks, so you have time on weekends, if you're a busy person, to look at some of these kind of things and put a order about this consolidation. If you're like working person, then you put a order at around say 52 or 53, and then if it breaks out to 53, you are in that particular stock. So that is how you can use MDT. Now, having looked at MDT, similarly, like when the stock turns negative, if you see like I say the biggest losing stocks, so again like I want to change it to back to my original thing, which is Universe, because when I show things, I don't want to complicate life later. So like let's look at the negative part of this, and if you're looking for short candidate, like I say, look at the Mdt Bearish. Now in the Mdt Bearish, what you're looking for is Universe liquidity is true, Mdt is below 0.81, less than 0.81, and price history is about 3. Now you have 155 stocks, which tells you that more stocks are up than down currently. Now when you're looking at this list, what you want to do is like you want to sort it not by, like if you're looking for a shorting candidate, not the weakest, like you want to look at something which had weak this thing, but it is now counter trend rally. Sometimes like there'll be like counter trend. Now here is a stock which was in a severe downtrend, Dyna Container, right? And you can use the MDT on the bearish side as a to find long candidates also, and you can use it to find short candidates. Similarly, you can use the MDT on the long side to find long candidate, and also find extreme momentum candidates which are made a big move as a possible shorting candidate, like this or Square, which had made a big huge move in just last 20 sessions, or where like it went up 42% and then it reversed. But like we're looking at like say something which is like setting up as a possible short, And when you want to look at something which is setting up as a possible short, then you have like ODCIX, you have OTIC, okay, you have dry ship. These are all like probably reversing. But if you can find a good shorting candidate, which is a weak stock, say this is a weak stock, like say here, this would have been a short candidate. Like that way you can find candidates, or this is rallying and probably this rally might fail. So that is how you can find, or like this is an ideal example of the kind of stocks which are like, say if this goes down, like you can put a short order at around $20, because if it goes below 20, then this particular small counter trend rally is over. So that is how you can find weak stocks using this. But remember that when a stock is extremely weak, it is more likely to reverse. So because of the way the market is structured, market has upward tendency, it continues to keep going up. Over the year 99 or 100 years of stock market history, it has always gone up more than it has gone down. So just because the stock is in MDT down doesn't mean it's going to go to zero. It is more likely that it is going to have a sharp reversal. And if you're looking for really playing bottoming candidates, or like looking for stocks which are likely to reverse after a big down move, the MDT can also help you find that. So that's how you use MDT for both long and short. Now let's look at DT, because what happens, and this is an ideal example to look at DT, is probably if you look at the Nicholas Darvas book, where he talks about his Darvas box. Now one of the things is, when Nicholas Darvas developed his method, what he was doing is, because data sources, software, all these things didn't exist that time, or they were not really such prevalent, or they were not available cheaply as they are today. Today most of the scanning softwares are at like what you can, for $19 per month you can get a good scanning software, or even lower than that. So what he was doing is, he was going through the Barron's site, and in the Barron's, if you look at the Barron's, which is a newspaper, weekly newspaper, so he was using a weekly data. And if you look at Barron's, okay, the magazine has like basically, if you see the printed magazine, there is editorial, or there are these articles, but there will be like just tables and tables of stuff. Basically, in those tables, when he was looking at the prices, what he was looking at is, he was looking at two columns. He was looking at the stock's 52-week high, and next to it was a 52-week low column. So there are two columns, one was a 52-week high and 52-week low as a column. So when selecting stocks for his box theory, or whatever he called it, what he was looking for is a stock whose 52-week high is 2 times its 52-week low, because he was looking at like next to each other those figures. So if he found a stock where the 52-week low was 10, and if the 52-week high was 20, and the current price was within 15% of that, then as long as the ratio was more than 2, he was looking at highlighting those stocks. So what he wanted to do was stocks which had doubled, okay, from their 52-week low, and they are still near their high, not really given up the gains. Those are the stocks which he was looking for as candidates for the box to form. And the box was just a consolidation, like say this is like say, I'm not sure if team has DT, like okay, team meets that criteria. So if you see this particular stocks, in this particular case, this is meeting the DT criteria. It is like basically it's 52-week high here on this particular day, first time it went, which is like the high was 50, and its 52-week high for is 25 or something. Okay, so if you see like a 52-week was here, like probably somewhere around, you will see that its 52-week low is $24.33, or the low is $23.88. Exact low you will not, and I am not just roughly, I am looking at it because that's the October to October period, and this is October. So 52-week low will be somewhere here around 23.8, and this was around 100%. Okay, on this particular day it went above that, so that's how it made the DT condition. After that, now this is forming a box. the box is just a consolidation, sideways consolidation, or a consolidation of, like, say, basically if you want to draw a box here, you can draw a box here, which is a box which is forming, right? See here, try and get it perfectly. Box. Okay, so here is a box. Okay, now the box has the lower boundary and upper boundary. So once it crosses above the box, in which in our language we say breakout above that consolidation, then he will buy and he will put a stop at low of the box. Basically he will put a stop here, whatever might be the low here. I don't know, I can't see the price just now, but like, can I see how, so his low will be here. Say that is around 46.40 or something like that. So that is the low of the box, and then once it crosses this box is when he will buy. So that's how he formed his method, because he was looking for a stock which is already proven. So the whole idea behind DT is that the stock has shown momentum, or like it has already doubled from 52-week high. Say let's look at something like SQ. Okay, now here is, like, can I say, stock doubled here. Okay, that is on 223, somewhere around February is when the stock doubled. Here also it had doubled, but then like it lost momentum. But like, say here, if you see like this particular thing, okay, and after that it formed a box, right? This is a box. Like if you want to say, I can draw a box like this here, okay, and then when it broke out of that box is not really very elegant, but like it will be thinner than that in terms of, like, say, it will be like, say, it's basically he used a terminology of box, but it is just I'm trying to do it exactly like what he said, and that will be the box. Basically, like the low defines the low of the box, and the high, this is the high of the box, and then when the stock goes above that, then he puts a stop here, and then if it keeps moving, and there's another box which forms, and then another box which forms, and then every time he'll keep add and keep pyramiding, and then another box which forms, that box, and then like another small box which forms, and then another box which forms, and another box which forms, and then it reverses. Okay, so that is, he will buy and then he'll keep adding, or he'll keep moving the stop. Like here will be his first. When the next box forms, then his stop will move there. Then when the next box is formed, then he'll move the stop there until he gets stopped out. Basically, that's how he was looking at it. But in order to find in the first place the stocks which made that condition of DT, basically you're looking for setting up this as scans. What are those scans? C by mean low 252 is greater than 1.80. Now what I'm looking for is stock has to double, but he was looking at stocks which had still within 20% or 25% from their 52-week high. So instead of taking a stock as doubling, I'm looking at a stock which has gone up at least 80% from its 52-week low. In the telechart language, mean low 250, MINL 250 means 52-week low. This is the minimum price or the minimum lowest price in last 252 days. So that is how 1.80 comes in. Okay, so you have stock. And you can look at like any stocks, some of them will not meet that condition. And I also have somewhere, like, say, you can set this as a sort column, so C by mean low 252, and if you sort by that, what you will find is that let's look at some of the examples to see, like CJ. Okay, obviously there was some, I think, a buyout or some offer or something must have happened, so that why that bigger thing. So that's not an ideal candidate. But like you have Mara. Okay, Mara has like, and this is where it made the DT condition and it has doubled. So, or let's better candidate to look at probably is Weight Watchers. Okay, so look at this. Okay, Weight Watchers made this big move, then it like, and it came down, pulled back, and then it like again made the double trouble condition, or the Darvas kind of a condition, and then it set up here, and then since then it made a move up around 171%, and then it is just going sideways, forming another box, possibly another box here. Okay, if you like, and I draw larger box here, say this is the high, that is the high of the box. So approximately. Okay, I think it is breaking down from the box probably with yesterday's price, but like that's, and if it breaks from here, then that's a buy. If it breaks down here, then you get stopped out if you're still in that trade from previous boxes. Basically that was the thing. Okay, so that's how you can use the DT, which is basically again will help you lower find less number of stocks. Like say if you want to create like say a DT as a scan, now we are going to like and look at universe as a list. Universe is the list, add condition and DT. So DT, let's see by min low 250 greater than 1.8. Okay, and I'm going to add a liquidity condition because I don't want to look at illiquid stocks. So liquidity condition is minimum volume in last 3 days as of yesterday is greater than 100,000. So your minimum liquidity, and I don't want to look at very low price stocks below say $3. So I can put in a condition which says price is above 3. Okay, so if I put that condition, I get 331 stocks. See, we boil down 5,000 or 7,000 stocks to just 300 stocks. And again, what you're looking for, the reason for doing something like this is that you want to find the stocks which are consolidating. You want to find a stock like this, okay, which is consolidating, okay, and then you want to plan your trade. You want to like get into this kind of a stock. So that's the whole idea behind something like this. So again, like you have 331 stocks. In order to find stocks like this, what you want to do is the same thing that we did with MDT, which is like basically insert a column here for a month and put month here, and which you don't really need to make that yourself. There is a price percent change 1 month somewhere, if you can find price percent change, a month. Okay, anyway, if yeah, okay, it's here, so I put in add as a value column. So once you have that, what you can do is like you sort it again by the lowest value. Okay, some of these will be stocks which are going down, they are reversed, like, and I say something like this is obviously reversed, it is going down now probably, but you will find once you start going through that list, that's it here JP. Now the difference between MDT and DT is like MDT will find candidate sooner than DT in many cases, and difference between MDT and TI65, which I showed you last week how to set up, is that TI65 will find those same candidate even earlier. So that's really, it's how you want to, how soon you want to find the candidate. Like say here Hertz, now this is more looks like a reversal, but like say something like JP or Cure, which is are the kind of candidates which basically, now in order to avoid like finding this reversal kind of candidate, you can put a condition saying that the stock has to be within 15% of 52-week high or something like that. The only problem with that is that when you are in a bearish market, when the stocks go down a lot and then they start reversing, they will meet DT condition once they're doubled from their bottom, but their 52-week high will be way up because they had gone down so much. So I don't recommend putting that as a condition on DT. It might be more effort to go through some more candidate, but like you can just keep it the way I have shown it here. Now you have a bio, which is like setting up possibly as a thing. You have HMNY, which is setting up. So you can go through this list and keep looking for candidates which are setting up nicely, and those are the candidate. Say like this is obviously like setting up nicely. It's got a very low range bar also here probably, and then those are the candidate you want to watch. And obviously if you want to further narrow this universe, there are other ways to narrow it by using some sort of a fundamental filter. So if I, instead of using universe, if I use say the kind of list which I used earlier, which is 29 by 29 IBD 29 by 29. If I use IBD 29 by 29 and look for candidates which are DT candidates, I get only 32 stocks. So obviously it's easier to go through 32 stocks quickly because they have something, they have fuel, or they have a very solid basis to at least you can put in a lot more money because you based on their characteristic of growth, like the stock is anticipated to grow at 29% earnings next quarter and 29% for the next 1 year. So it is a growth kind of a companies, and growth companies make big moves. So that's where you can put in, like, if you want to do position trading or you want to hold positions for long, you can find candidates like this using DT. I would suggest that you play around with both of them. MDT will find many stocks quicker than DT. Under certain circumstances, it is better to use DT, because especially when stocks have a long bear market, or the market has a bear market where the market corrects more than 8, 10, 20%, a lot of stocks will go down 40, 50, 60, 70%, and that's when the DT can find you stocks which are reversing from the bottom, because even though in a bull market, once the bull market has been established, stocks with momentum continue to go up. In the early phases of a bull market, the stocks which have been beaten down the most, they are the one which makes the biggest move. See here, like, this stock was beaten down, it was down 84%, and then it reversed, right? And so that's how you will find stocks early using either one of these methods, like here Shopify. If you're looking for holding longer term, especially those who want to hold positions for longer term, I would say focus on MDT and DT, because those are the kind of stocks which are developing momentum, longer term momentum. If you're looking at, say, Uber as an example, like, this is where you will be notified that this stock has got momentum. Earlier also it had momentum, then it formed a box, then it is breaking out of the box, again forms a box, like this is another box here. So if you see here, this is another box, the DAR was kind of a box, then like, it forms a box and the box breaks, and then it re-establishes, and then it breaks, and it breaks, and now it is here. Okay, so that's the other word is consolidation, sideways consolidation is what you're looking for, or ring central, like, say here stock is like, and it doubled after that. So the whole idea behind this is, like, once it doubles, that's when, as soon as it meets this condition, is when you want to be, like, closely watching it for an entry. Once it consolidates for 3 to 4 weeks kind of a thing is what you want to be. So you want to find out of this list something which has just about managed to go in there. Say, like, this particular stock in the last 1 month has just managed to double from its 52-week low. So that's the kind of stocks you want to focus on, not something which has already gone up a lot, because it might be due for a reversal, basically. That's the nature of the market. So something which, like, sets up, see, this has been going sideways, like here in the initial 8-10 days of the first consolidation. After that, if you can get in, then that's better. Like, say here, a lot of stocks setting up, basically going sideways, STM, FMCI, Square, and same way you can use another list. You can use the IBD 85 list, or whatever you want to do. Okay, now again coming back to MDT. So, and like, an HT is basically different from DT. It's basically looking for a stock which is down 50% from its 52-week high. So stock, when it is down 50%, something has gone drastically wrong with that particular stock. So what you're looking for is a stock which is, like, say, let's take an example of here. Say here the stock was down huge, like, and I say this is where it got 50%, and then it kept going down, down, down. Or, like, if you look at any stock which is down a lot for the year, say if you take the universe, I'm not saving any one of these, but you need to save if you're creating those scans, because I already have all these scans. So I don't need to save them. Say like dry ship, something went drastically wrong with this stock, right? And it's like, and I say here like, and its stock is down and then kept on going down. So once the stock drops 50%, it's still, if it something has drastically gone wrong in that business, right? And the stock went down like another 40-50% after that. So these are stocks which are like something was going right for this stock and then something went wrong here. Say here this is DT, and then since that price, if you look at the stock is down 86%. Okay, so MDT will HT will find you the weakest stocks or stock where something has gone down drastically. There's something like this, like say if you look at this stock was trading at around $78 last year, okay, or here it was like trading at around $53. Something went wrong with this particular business here. Once it like dropped down, and see from that price it's dropped down 85% more. So something drastically is wrong when it meets the DT condition. That's the way to look at it. You look at there has to be some catalyst, right? And why a stock would be down. And many of these, especially stocks which are like going, some of these are reverse split, so they can look like that. But like if you see a stock like this, it's like a lot of retail stocks you'll find, because the retail model itself or the fundamentals of the retail business itself as a business model is under attack by something like Amazon. So this stock is down 76% after you identify. So if you run Mdt Scan to look for charts, you will find stocks which are like something is drastically gone wrong for that particular stock. See, this Bonanza Creek was like, this was like, obviously there is a reverse split here. It split 39 shares for 4,352. So that's like misleading. But even if you don't look at that, you will find many stocks like this Fred's discount store. Something went drastically wrong. Stock is down almost 50% after it met DT HT condition. So you can find stocks which have gone like high probability shorts you can find using HT. Why are they high probability shorts? Because see, this is like this is another example of a retailer. Something, when you see a lot of stocks coming in here, something is wrong in their business model, or something is drastically changed. The stock is down almost 80% after it met your HT condition. So that's how you can find high probability stocks, especially stocks which are making a big moves and then they meet HT condition. Something has gone wrong. See here, something has gone wrong. Cardiatronic. So obviously like something went wrong. Or like say, let's look at some of the which is the drug stock, which like went down a lot, not the Gilead, but like now it has bounced back. Some of them have bounced back, but like you remember that drug which used to advertise crazily, the fungal drug, and then the stock went down a lot. I don't remember which company it was. It was like part of the S&P 500 also, and the stock was down a lot. And now in recent days, it has like recent period, it has or even Under Armour, which was like a stock which people were saying that it's like going to kill Nike and it's one of the best thing. But like see here, from there stock has gone 60%. So whenever you get a stock which meets HT condition more than the MDT condition on the bearish side, HT condition, it means something has drastically gone wrong in that particular business. See, this Envision Healthcare Corporation. This stock has recently dropped, and I was looking at I was reading what is the story here and what has changed. So this is a stock which you need to keep it on your radar, because something has drastically gone wrong. If it continues its rally down, it can go down like other stocks which have had that kind of a thing. Or even look at Advanced Auto Parts. Stock was going up for a long period of time. Something has gone wrong in this particular industry. So that's why the stock went down 50%. It's bounced back a little bit from that. But if you want to see, like this Foot Locker is another example. Something has drastically gone wrong in this particular business model. The stock has bounced back a little, but say GE. So you'll find like Macy's, you'll find retailers after retailers in that particular thing. And especially when you have a very high performing or a stock which is the like say been like and this is S&P 500 I'm looking at, which is going up for multi years, and after that it goes. See, Chipotle Mexican Grill has not yet reached like HT level, but like if it reached HT level, what it tells you is something is drastically wrong in that particular business basically. So you can like and study this and look at like a lot of stocks, and it will tell you when things have gone wrong, and if it doesn't recover, especially all the rallies which happen after that continues to be with the HT condition being true, then you know okay, there is something which has gone wrong with this business, and it is not going to be going to come back very easily. It will take long time. So that's what happens, and that gives you a high probability short or like an a shorts which are basically doomed, or they have some sort of a catalyst, because anything which happens like that, there has to be a catalyst. So you see here Celgene has gone down, but it's not yet meeting the DT condition. That particular stock I want to find, because that is a good example of a high flying stock. I don't remember the ticker. I'm trying to recall it. It was in Fortune in S&P 500, so one should be able to find it. It has bounced back from that. Is the company which bought the Bosch, I think, no, not the Bosch, the eye care company. It was like one of the high flying stocks in the S&P, one of the best performing stock, and then most of the drugs, they were like just buying generic drugs and then changing the formulation and increasing prices by 300, 400, 500%, and they were very successful for a couple of years with that formula, and then the entire thing collapsed, as usually what happens with questionable business models, and then the stock kept going down, and in recent periods it has bounced back. So that's why I don't remember the ticker. It did bounce back hard from bottom, and it's doubled or tripled from the bottom now. But I want to show you that stock to show you how TT, ST can be used for both finding shorts and long. I'm hoping that it is still part of S&P 500, because it was the best performing stock just 2 years ago, I think. I just saw it last night and I forgot the sticker. I'm just trying to find, and it's a good example. That's why I'm taking so much time to go through all these stocks to find that example, because when you see something going wrong drastically, the ST will tell you if it meets ST condition. That tells you that don't really get into this stock. There will be a lot of time temptation when the stock goes down, and I also fallen prey to this couple of times. Like you feel, oh, how can this stock be like trading at such a low price? But then after that, it can go down another 80%, 90% after getting cut in half, basically. Where is that stock? don't see this stock here, but it's a pharma stock. I think it must have been dropped from the S&P 500, but it was a stock which was like one of the best performing stocks for 3, 4, or 5 years in the S&P, and then the stock kept going down and going down, and then now has reversed from the bottom also. But like say here, if you see, once the stock met DT condition is when you want to look at the stock. These are all the best performing stocks in the market. So basically currently, so this is how you can use MDT and DT. Like MDT is basically half a year's momentum or 126 days momentum. This is more a stock which is double from 52-week low. Doesn't mean that it will take 1 year to double. Stock can double from 52-week low very fast if there is some sort of a this thing. You can see recently like a lot of stocks would have done that. Low price stocks can double like in a jiffy, and that's how like it can happen. So you have like say Mara, which was like near 52-week low, now it's already meeting your condition. Or say many of these shipping stocks are in a similar kind of a situation. Or stocks like Zoma, they were going down and they have doubled or tripled. And that's what you want to find. You want to find this first consolidation, the first box, as Darva says, after it doubles. And this is what was the whole way of his developing the box theory, where he was looking for a stock which has doubled from his 52-week low, basically. And you can look at like say the top 100 stocks by, I sorted this by DT, so which will give you an idea as to how stock progress. Like say here is an example of a stock which doubled from here, went like corrected, and then set up again, made a move, and then like set up, made a move, and then made a move. So that is how stocks set up, and how you can use these things to find stocks. Now I would say that use DT and MDT if you are going to look at stocks to hold for a longer period of time. If you're a working person and you don't want to go through 600, 700 stock, then use DT or MDT. And if you want to like further refine that, then marry DT and MDT with something which has got a fundamental, some sort of a fundamental, like I showed you growth stocks which meet certain conditions, and then use MDT on them. So that way you will be useful. Now just another thing which I want to say is like say in IBD there is like EPS rating and there is a relative strength rating. Now the relative strength rating, they say that is their proprietary formula. You don't know what it is based on. I know exactly what it is based on, but like that's a topic by itself. Doesn't matter. What you want to find is like say when somebody says, look, I only focus on stocks with relative strength about 90. Now obviously you don't have an access to IBD, or you don't have an access to Market Smith. Market Smith costs around $150 a month, and if you don't have that much amount of money, how do you find the same stocks? Using telechart. Like say you have universe. Okay, the simplest way you can find stocks which are meeting exactly that condition is what you do is you create. So let's go and take our universe, and on universe we want to find stocks which have enough liquidity. So we put in liquidity condition, which is true, and then we want to like only focus on stocks with price above say 10, which is what like an IBD says. I don't know why it says that, but like it doesn't matter. You don't want to like argue with something like that, but like say yep, and you want to find stocks which are which are 90 plus relative strength rating. So what you do is you go and formula value not greater than, use rank, okay, and you set this rank to 90 plus. Okay. So let's say this is 90. Okay, okay, let's set it at 90. Okay, now you get 364 stocks, and I will bet that if you run a scan in IBD with 90 plus rating, 90 plus relative strength rating with the same condition like liquidity being above 100,000 and price about 10 and all, this will meet 96-95% of the stocks, like 97 to 98% of the stocks. 364 stocks which meet this will be same, and the ranking will also be same. So if you don't want to spend money on IBD or you want to find similar kind of stocks, just use the MDT ranking. As I showed here, like you take the universe, liquidity is true, price about 10, and use the rank about 90, and that you can play around with. You want only like say about 96 or 95, you get 96 rank, you will get stocks 179 stocks to look at. Again, you have 179 stocks, but you don't want to look at extended, so the simplest way is you put in a filter like month and sort by the one which have gone up the list, right? Those are the stocks which you want to look at, and they are JP, Cure, Abio, and HMNO, and all that, like basically Skechers team, which is the number one criteria stock which you should keep on your list. Any breakout about this is a buy on this particular stock. But that's how, or like even the Syntel looks nice, but I don't know whether it has the good earnings or not, but that doesn't matter. We are looking at relative strength, so you can find stocks which meet IBD criteria by just using the rank feature. If you want like in a 90, you put it at 90 and you'll find exactly same stock. There'll be like 1 or 2%, like 3 or 4 stocks may not meet that condition. There might be reason for that, like in terms of how many number of days data it uses. I'm using 126 days. Sometimes people use 130 days, so you can tinker around with that. Technically, you're 252, 360 days in a year, and then you have 52 holidays, so you take that out, so you get like 300 days, and then there are market holidays, so that's how like that 126 to 56 days works out to, but 252 days, but some people use different number, and slight variation in the number which we'll use will little bit change the ranking, but it is not going to drastically change the ranking. So you can use Telechart to find the same stocks. Obviously you will not find the same stock in terms of like say something like this, the kind of scan which I ran 29 by 29. You're not going to be able to do it easily with Telechart unless there is a data, fundamental data, and I have question marks about the fundamental data available in Telechart, so I wouldn't say that I would rely on it, but this is how you can find stocks with a longer term momentum profile, either based on MDT or DT. There is a little bit of qualitative difference between the two, but the objective of them remains same. And the objective of them is to find a stock once it establishes momentum, and then find a good buy point in that particular stock. Here is where it meets DT condition, here is where it meets the MDT condition. MDT will always be quicker to find a stock, and then like that itself was a good buy point. Here is the Darvas box, right? Mr. Darvas box is found here. Okay. And breakout from that, you buy. Another Darvas box is found here. And that's the width should be lower, so this breakout is another one, and then like it forms another box here, and so on and so on. That was his theory basically. Any consolidation of 4 weeks plus or 3 weeks plus, he called it as a box. So hopefully this will give you an idea if you're looking for finding longer term stocks, how to set this up in charts, how to set it up as a scan, and using that you can find longer term candidates or candidates which are like this, which are setting up just now, which are basically, why this has happened in the last minute I don't know, but these are the kind of stocks if you want to find, or you want to find stocks like this which are just starting out, not yet, like it did with DT condition here. If it goes up a little bit it will again, but and they are early in their trend, they establish momentum, so you want to hold for a longer period of time, then use MDT and DT.